Welcome to Breaking Bitcoin, recorded live here in the studio. It is Thursday, October 17th, 2019, foul year of our Lord. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from. Of course, I am your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. And I want to give a big shout out to everybody watching from across YouTube, Twitch, DLive, Facebook Live, or of course on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, follow, share, and engage in the live chat, and hit the thumbs up buttons, guys. Highly appreciated for the YouTube algorithmic gods if you happen to be watching on that platform. We've got a fantastic show for you guys today. So much to talk about, so much to go over. Bitcoin's price being the number one concern. However, I've gotten a lot of questions about altcoins as well, so we'll visit that topic as well. Of course, today's episode is brought to you by the Premium Trading Group. If you guys are new, experienced, or aspiring traders, make sure to check out the banner and see all that the group can do for you. I want to thank this month's crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecurity.io. And without further ado, let's get to the live scene and break down price in today's episode. Let's go, guys. All right, over here in the live scene, guys. And we seem to have Bitcoin's price pulled up. Let's do this. The YouTube random comment picker, loading comments. And is Bitcoin on the verge of disaster? Binance and Chinese malfeasance and cryptocurrency analyzed. Make sure to go check out yesterday's video. I do think that is something that everybody should be aware of, kind of the entire situation with the Binance and obviously the block over there. And we're going to randomly pick a winner from yesterday's video. And it was Saintsy, stacking up the wins. Well played today, sir. A scholar, a gentleman, and a trooper. Good to have you back, bro. It is good to be back. It is good to be back. Well, you know the drill, Saintsy. You've won 19 times now, my good friend. Head on over to the live scene. All right, let's head over to the live scene. Get a hold of me in the Discord, Saintsy, and I will tip you some crypto. There we go. The ticker's fixed now. Yeah, annoyingly, I fixed that ticker yesterday. And then I had to fix it for this scene live, like live in the moment. Why is this thing not bending? Work with me, baby. Don't work against me. Work with me. Okay, let's do this, guys. Let me give a big shout out to you guys. How we doing? We've got Lefty, DIY guy, GBU Wally, the one, the only. What's up to you, my good friend? Sumone, Caprica, Nitin Soki. We've got Sean, Bond in the house, Mass Stash, Alpine Whip, Ron Legato, Ben Kirkland. What's up, man? Midwest Attempts, Furry Boffin, Access Denied. What's going on, guys? It is definitely manipulation. Absolutely. Okay, let's talk about Bitcoin first and foremost. We'll just get right into it after I grab me a sip of this nice, hot Mississippi grog. It's life, man. Dark Rico, don't think I forgot about you, man. Okay, on the daily, nothing's changed since yesterday. We do have a green candle. We do have, well, white, obviously, with my color scheme, but we do have a green candle. We have a couple things, as I said yesterday, putting on the short position in a short position at the moment because of the signals coming in. Now, the thing is, as I said yesterday, because we are driving down into an area of demand, I would be far more apt to let it go. Have I done such a thing? No, I have not. The primary thing that I'm going to be watching for is the 4-hour closure above the baseline is really what I'm watching for right now. I know a lot of people got excited about this last 4-hour movement, really this last 1-hour movement. It hasn't really amounted to much at the moment. To be quite honest with you, on the LTFs, just looking at overall structure, if I were looking for an intraday trade, I'd most likely be looking for an intraday long. Just based on if I was trading this time frame and looking at the indicators, what they would be signaling for me. In fact, as I said this morning with my morning update to the premium group, we did have a long signal right here off of this long 1-hour candle. So the 30-minute chart would have got you in earlier. That would have actually hit 1 TP for you at about 1%, and you would have stopped that at break even. So not the most profitable intraday trade, but when you're dealing with Bitcoin's range trading here and you're attempting to do trend trading just on smaller time frames, sometimes that's the best that you can get. The only other thing that's working pretty decently on the LTF still within this area is volatility expander or reversion to the mean strategy. Here we have volatility expander. Essentially, again, same kind of concept here, buying anything that comes back above the lower band once we've retraced outside of the lower band. That would have set you up for some drawdown, but would have put you in for, again, about a 1 or 2% profitable trade if you would have sold one of these wicks at the top. More likely, if you're intraday trading this, you are looking for a potential breakout, or again, you're in the same boat. Most likely holding, dismiss, close, that was weird. Most likely holding your higher time frame short and then just looking to hedge against that position with intraday trading and intraday volatility to the upside. So with that being said, let's hop back over to the daily and commence where we were. So on the daily, nothing has changed. The only thing that has changed is that Minx is giving us a bullish column above a rising explosion level. Now, with the sped up settings, we're not going to flip as much as we'd like to. So, often there's going to be a lot of indicators out there that if the candle is red, the signal is going to be red. And if the candle is green, the signal is going to be green. So finding that fine balance of sensitivity and, sensitive enough to get you into a trade, but lagging enough that it actually confirms the movement instead of just throwing you into every direction with every single daily candle flip is not what you want. There's a couple ways to get around this. We've talked about this before. There's Renko strategies out there that can help. There are Heikinashi strategies out there that can help quite a bit as well. OHLC charts still, I have a preference for, still what I trade because indicators I think progress more smoothly around them. And the real magic, as I talked about yesterday, is filtration. I talked yesterday pretty much at length about filtration and about money management and risk management because that is the real secret sauce. That is the real magic that allows one to be consistently and sustainably profitable. But filtration is the second step of that in what we do. So again, filtering all of our trade signals from any one indicator with other indicators that have a statistical edge and giving them a higher success rate, a higher hit rate, a higher win rate, a higher P&L at the end of the month. Anyways, I want to point out a couple things. Now, we are printing a green column on Wadatar explosion, but we're not above a rising explosion level. That is one signal that I would be open to exiting the trade, as I said yesterday, although I am going to take the trade in the dominant position because the reward for the breakdown is just too high. You can't ignore that. I'm not really eager to take longs off the bottom in this range. It's just not how I trade. Although, again, I understand the approach to that, but the downside risk is there as well. And as I said yesterday, when Bitcoin breaks down from a range, it moves with a lot of momentum and volatility. And there are key candles, there are key daily candles where if you are not in that trade and you are entering on the piggyback of that trade, you're just missing out on the large majority of the profits. So we'll wait and see. On the daily, there's really not a whole lot. Honestly, Bitcoin's price is fairly boring, to be honest with you right now. I think the best position, the best posturing, the best thing that we could possibly do is be in the short and wait for this breakdown because that is trading in the dominant direction of the trend. Now, as I said yesterday, it's also possible that we just grind this area out for an extended period of time, like a teenage me with a copy of Final Fantasy VIII. Really like grinding out those adamantois back in the day. But, and there's a couple theories around this. I mean, the biggest theory that I see about this is that if Bitcoin moves sideways for an extended period of time, that's extremely bullish. And I don't really understand. I mean, I understand where that idea comes from. I've heard that from a lot of people. I feel that's also I've heard that from several other individuals that do shows on YouTube. I'm not really sure where the logic of that comes from. Consolidation or range contraction, which is what consolidation is. It's contraction of volatility, inevitably, doesn't give you a directional bias. Your directional bias is determined by your baseline. Your directional bias is determined from your higher time frame indicators and from the confluence of how these indicators sit together. That is how you determine directional bias. You have to respond to momentum. Momentum equals directional bias. So I don't really feel that Bitcoin grinding out sideways for a long period of time is bullish or bearish in and of itself. It's just volatility has nothing to do with directional bias. Volatility has everything to do with profitability, but you have to have your directional bias correct to take advantage of that volatility, or else you're going to be on the short end stick of that volatility. So really, in my eyes, to be quite honest with you, if Bitcoin were to put in an extended period of consolidation at this range, between, let's say 7,900 and 8,400, 8,300, somewhere around there, That would actually be bearish to me because the dominant trend is to the downside. We've had a distributive pattern at the top of a rally, top of a very strong rally in 2019. We put in a distributive pattern. We've broken down. We are now consolidating in a lower range. Typically, as we've talked about with symmetrical patterns, i.e. symmetrical triangles or what have you, or parallel channels, those are typically again, it's about 50-50, but again, the safest directional bet, if you're going to just be using that data to determine a directional bias, is going to be a continuation of the dominant trend, because a trend comes into existence with the initiation of force and the initiation of volume and momentum and volatility breaking down from a range, all of which we've had to the downside. We haven't had that. We haven't had oversold conditions. And by oversold, I don't mean RSI or indicators or oscillators or anything like that. I mean a huge volume spike at the bottom to indicate that all willing sellers have sold and willing buyers are entering into the market, indicating a potential reversal in trend. We also haven't seen a high momentum or high volume or high volatility break out to the upside, which is really what you'd want to see. And why I said, if we are able to get back above the baseline, back above these $9,000 price levels, on volatility, I'd actually be pretty bullish. That's what I want to see. But I need to see price prove to me that it's overall bullish, because otherwise all we're going to see out of this is just a return to the top of this trading range around 8,000, 8,400, or excuse me, around 84, 8,500, and then rejection again. That is what a range looks like. Am I up for the Final Fantasy remake? Final Fantasy VIII remake on PS4. You know, I saw it, but I'll tell you the truth, man. There's a part of me that wishes I could play video games, but I just can't, man. I just don't have the time to do it, my good friend. Unfortunately, my downtime currently, if I have downtime, I'm usually just working. I'm usually just working on indicators, strategies, and nowadays, honestly, a lot of what I do is I work with people. I do a lot of mentoring. And it's just, it's just a train that's hard to get off of, man. It's a train that's hard to get on. And I know because I work with people all the time on this, as far as turning their lives around and adopting a lifestyle of, forward momentum and of positivity and of grinding and of getting stuff done and of just pretty much just working your butt off all the time. And when you're not in that mode, when you're not in that mode, it can be very difficult to get into that mode. But again, it's a train. It's kind of like sobriety or something like that, right? It's like when you're on the train, when you're on the wagon, that you're riding that wagon hard. And when you fall off the wagon, it's really hard to get back on. So you just got to stay on the wagon, brother. Time for a break, Justin. Premium game night. But returning to what I was saying, what am I keeping my eyes on the daily? Obviously, my primary concern is watching for that Minx crossover. Minx crossover being the primary exit signal. If Parallax were to flip bullish, that would be an exit signal for me as well. And if Wadatar explode, if we're able to close the daily strong enough that we actually do get this green column printing above this explosion level, I'll exit as well. And I'll just wait for the other confirmation signal, which would be pretty much anything at this point in time, depending on where the indicators are sitting. Because right now, Minx is below the zero line. It's also obviously below the noise line, giving us the go-ahead for short trades. Again, when we're looking for continuation short trades, we're looking for kind of any and all opportunity and excuse to re-enter into the dominant direction. So that's my game plan where it is right now. And overall, I'm not entirely impressed with this. If we go look at Heikin-Ashi, we also haven't had an HA trend flip yet. We're still printing negative candles, meaning from OHLC. So when you smooth price out, you have to understand that all Heikin-Ashi is OHLC4. That's all it is. And then the bars are printed responding to that. So OHLC4 is just the smoothest smoothing of OHLC data that you can get. There's obviously more mathematical ways to smooth the data out, but it's open, high, low, close, divided by 4. That's all it is. It smooths price out to get a more average price, as opposed to something like HL2, which is actual median price of the range, because it's high, low divided by 2. So it's actually the median, the middle price. And then HLC3, which is a little bit smoother than that, and OHLC4, which is Heikin-Ashi, which is as smooth as you can possibly get. And I don't have a problem. I actually think that Heikin-Ashi strategies are okay. The big the problem with Heikin-Ashi strategies is that this becomes Heikin-Ashi strategies are really good, but they're better on higher time frames. they become more of a problem the lower time frame that you get, because you're looking the it's fine for real-time trading. Let's rephrase that. It's fine for real-time trading. Everybody, like, for example, let's look at OHLC data right now, okay? Okay, so real-time price, we're on the Bitstamp chart, is 80.80, okay? That's real-time price. Let's get the, let's do something here actually to make this easier. Is the last value line. Okay, let's bring the last value line on here. All right, 80.77. All right, so on its way up, going down, whatever. 80.77. Okay. Now, if we look at the last value line on OHLC4, it's 80.35. So the main problem is you need to correlate the data with the actual price. And again, I don't think it's that much of an issue for real-time trading, right? But for somebody like me and for the school of trading that I teach, it is impossible to backtest a Heikin-Ashi strategy, because the price that you are going to be seeing, and especially obviously the lower time frames that you begin testing strategies on, you're going to get more signals. So you're going to get more signals on the 12-hour time frame that you're going to get on the daily time frame if you're testing a 12-hour strategy versus a daily strategy. So the inability to backtest a strategy is kind of a deal breaker for me, because I need data. My big thing is backtesting. That's what I want. I find good strategies that backtest well. I forward test them to see what needs to be tweaked. And really, that's, everybody. There's no complaint that I've ever heard, ever heard, that's valid, that can negate the necessity of backtesting. It's that simple. I've worked with a lot of traders, and at the end of the day, the most profitable traders that I know, the most successful students that I mentor, are the ones who take the backtesting seriously. They put in the work, and it is work. It's different. It's not sexy. It's not active live trading, catching big wins, hanging out in live trading rooms, posting shit on Reddit, blah, blah, blah. It's a completely different world. And again, coming back to that analogy of kind of being on the train and being off the train, that doorway, it can be difficult to walk through. But once you walk through that doorway and you start seeing the avenues that are open to you, the tools that are available to you, the ability that you have to compose a strategy and define the rules and impose your analytical will on the market and extract money out, is completely unreal. It's a game changer as far as active trading goes. And again, there's this huge problem where newer traders and even experienced traders have been, because you have to understand, there's a lot of experienced traders that don't backtest, right? And that doesn't mean that they're terrible. It just means that I notice a huge difference in those who start off right and those who start off wrong, or those who start off wrong but go to backtesting and develop a systematic strategy, and then come back to live trading. So the problem is I think that out of the gate, I think that a lot of education in the space shunts people in to this concept of trading on lower time frames to start with. And I hate that. I absolutely hate that. It's the worst possible thing that you can do. The worst possible thing that you can do as a trader who's been trading for less than 2 years is pull up the 15-minute chart. It's the worst thing that you could do. You have no idea what you're doing down there. There's way too much data, way too much noise. It's way too random, way too chaotic. You have no edge. You're not going to make money, right? And the handful of people versus the tens of thousands of people. So the handful of people who are able to make money magically versus the tens of thousands of people who are not able to make money because reality, I think stands to the truth of that. And the problem, I think, the resistance that a lot of people have to systemic trading is that they have been shunted into this idea of what trading is supposed to look like, of how trading is supposed to go, of what trading looks like, of what trading feels like, of what being a trader is. And it's wrong. It's wrong and misleading, and it's designed to take your money. There is a reason why trading has a high failure rate. It's because almost, I would say 95% of traders get shunted into this 15-minute, 30-minute, 5-minute, for the love of God, concept of active daily trading. and reactionary trading based off of price action or based off of channels or based off of fucking support and resistance or whatever it is. Cornholio, thanks so much for the sub on YouTube. And there's nothing wrong with those elements, right? Now, I'm an indicator-based momentum trader, right? And that's what I teach. But I've talked about reversion to the mean strategies. I've talked about reversal strategies. That those things are okay. I've talked about price action. I talk about support and resistance. Those things are okay. But it's the framework of which you put that in. It's the system in which all those components come into, because all of those things are fine in moderation. All of those things are fine when balanced out with a systemic strategy. But just like with substances, too much of any one thing is too bad, especially unregulated use of any one thing or non-systemic use of any one thing. So there's no way, in my opinion, to get away from the necessity of backtesting. And the dramatic change that I almost see inevitably with almost all of my students who come in, who take the backtesting seriously, the dramatic shift that I see in them as a trader, with their mentality towards trading, with their approach towards trading, with their confidence in their trades, with their record keeping, and with their profitability, is night and day. It's night and day. And the people who don't take the backtesting seriously, who just want to keep doing what they've been doing, they have mixed results. Previous results are not indicative of future performance. That's correct. Yeah, they're right. And that's why you need to forward test right? You take what you've optimized in the past and you trade it live with low risk, and you see any of the flaws that you would have made in your backtesting. And that's actually the main point that I wanted to make before I went off on this tangent, which was the biggest, that is the biggest argument that I hear against backtesting, is that, well, what worked in the past won't necessarily work in the future. It generally works better than whatever half-cocked ass idea you have. I'm sorry, it does. Something that has worked well in the past tends to work okay in the future. Worst case scenario. And if you take that idea and you test it with low risk in real time, and you actively trade it systematically, then you can get a data set and you can actually see, oh, hey, this works pretty good. Okay, this worked okay. I'm going to try optimizing this, and then, doing that with low risk allows you to do that. And the end result, once you're done, is a money-making machine. That's what I don't get. Like, people need to put in the work to have a lifetime money-making machine. And it takes some time, and it's a grind, and it takes some effort, but it's, at the end of the day, you have something that 95% of traders don't have, which is a money-making system. And then people fall into the illusion that having a closer look will make it easier. And that sometimes that's the case. I know quite a few guys who are pretty savage. Got that term from my kid, on the lower time frames. And there's nothing inherently wrong with that. There's just a lot of noise, and it comes down to filtration. So if you can filter lower time frame noise, which there are methods to do that, but I'd say less than trading higher time frames, is somewhere you don't want to go to. That's my point. You don't want to go down to the lower time frames until you've built your systemic approach to trading up on higher time frames, and then you're okay to work your way down, because you're developing the discipline, you're developing the systematic approach, you're developing the skills, you're developing the tools, you're developing the rule set that's going to be your guide. Because it's kind of like active battle. On the daily time frame, you might get a couple signals a week. Okay, we can manage this, right? On the 12-hour time frame, you might get 4 or 5, or you might get 3, maybe 4. Once you jump down to the 4-hour time frame, okay, well, now you're looking at maybe taking a trade every single day. You get down to the 1-hour time frame, you're taking 2 or 3 trades a day. You hop down to the 15-minute time frame, and you're taking 5, 7, 10 trades a day, and you're not ready for that when you first start trading. You don't have the discipline, you don't have the patience, you don't have the approach, you don't have the tools, you don't have the skills. Got to get there, man. One-minute chart. I saw inverse head and shoulders on a 1-minute chart. I'm all in, says, hold your breath. Baby got back test. Is Bitcoin like a drug addict after your crack stash? I don't know, Brady. I have no idea. Trading is the new video game. Yes. Wally says, when you upgrade your gaming chair to a working chair, that happens. That is true. Could I show the EMA on this range? The EMA 13. Let's just bring up CC EMA. CC EMA is sitting at 82.61, right? As opposed to the Donchian, which is sitting at 90.47. So the Donchian on the daily is sitting pretty much roughly where the secondary baseline is at on the daily time frame, the 55 exponential moving average, coming in around that 90.50 area. All right. Don Camden, thanks so much for the 20 crones, my brother. Vitamin money to improve the immune system. Well, cheers to you, my good friend. Hopefully you're doing well over there in frosty Norway. Beautiful country, actually. So let's talk about a few other things. Let's actually hop back down here to the hourly. And I want to talk about the two signals that we would have gotten so far on the hourly. The first, of course, which would have been generated off of this hourly candle. You would have been able to take some profit on this wick. You would have gotten out at break even right here, but price didn't really go below. So if you were using a soft stop loss, you'd still be in this trade. You would have had two opportunities actually to hit TP1 on this position right now. Now we are holding above the baseline on the hourly time frame. Again, I already talked about not using the hourly time frame as my exit of this. I would be using something like the 4-hour time frame. If we can get back above, I'd say if we get a closure above 81.90, 8200 at this point in time. Or if Parallax were to flip bullish on the 4-hour, which it has not yet, because Parallax is less sensitive. It's looking at long-term trend. Now, over here on the hourly, we would have gotten another entry. So let's say that you were not using a soft stop loss. You should be generally using a hard stop loss after your TP1 once your trade is profitable, because you don't want drawdown to take away the profitability of an already successful trade. What you'd be looking at right now is right here, entry on the hourly right here, which would have again set you up for yet another win. So kind of like DJ, what's his name? Khalid up in the house. All we do is win, win, win. So here is another profitable 1-hour setup. It's about 0.58%, not a wide margin, of course. But it is a profitable trade. It is a successful trade. So you've had two long winners, basically almost, so not in essence, but in where you're actually entering into price, pretty much reversal baseline bounces on the hourly time frame, right? So you have a primary signal right here. You have a broach above the baseline and all indicators firing. You have TP1, reversal, probably stop at break even, I'm assuming here, especially on these wicks if you're using a hard stop. And then, pretty much either reversal baseline bounce entry or hourly long entry to TP1 right here. And you're pretty much actually looking at nothing at the moment. You're looking at nothing at the moment. You're holding that active position. You're holding that active long with further TPs of, should be pretty much identical, but 81.68 and 82.15, which would pretty much be our exit targets for something like a daily short anyways, or, exit signals, exit areas for those daily shorts anyways. Buy on the daily, sell with the bot on the 1-minute chart. Missed everything. Was it good today? It was absolutely fantastic. Chowdhury asks, how does price reverse from particular points? What metrics do experienced traders or whales use to place a limit order at certain prices to go in their way? The options are pretty much as the grains of sand in the beach, my good friend. You have very popular methods such as pivot points. People tend to set limit orders at pivot points. You've got support and resistance. You've got order block theory. You've got, you've got channels. You've got Bollinger Band channels, Donchian Band channels. You got Keltner channels, for the love of God, which I think is not really going to be used to be placing limit orders. And again, it also depends on your time frame. So, something like the hourly or the 4-hour time frame, I see or have evidenced a lot of people use things like Bollinger Bands or use things like channels to place limit orders. More frequently or more typically, and this just could be because of the popularity of price action trading, or as popularized in this space by my good friend Bennett over at Bitcoin Trading Challenge, the idea of trading against retail sentiment, or trading psychologically, like institutional money, like institutional order flow. So generally placing limit orders at maximum points of pain. ICT also promotes this concept as well, where you are entering into, again, that's exactly what it sounds like. Entering into the market when the majority of the market is at the maximum amount of pain. Because at the maximum amount of pain, what does pain mean? Pain means the area where anybody that's in a position where the market is going against them is feeling the most uncomfortability, or the most desire to be exiting their position. So for example, let's say that anybody who put on, let's kind of zoom out here a little bit. Let's say that anybody who entered into a short position right here around 8,200, well, if price gets up here around 8,500, they're going to feel a lot of panic. They're going to feel a lot of pain because they're going to be underwater in a significant way, especially, every option, every single trade is different, but obviously if they're over leveraged, or if they don't have any hedges, or if they're just full on exposure, so they're going to feel this is the maximum amount of pain right around here. And if you are following this philosophy of trading, you would see that as the optimum point of opportunity to trade against them, right? So instead of longing this, you would potentially look to be shorting this, right? That would also be tied in with reversal trading, because there's also a school of thought that says, well, at the maximum point of pain, you want to grab the liquidity and take price to the upside. So there's no right or wrong way. I would say that there's more common ways, and there's probably more successful ways. But again, that all comes down to what you do. For me personally, if we're talking about critical levels on the chart, I have found VPVR to be very VPVR, order blocks, and standard support and resistance to pretty much be the most successful. And I say that with the caveat that that's not my primary strategy, right? They are things that I will do. That's data that I will allow myself to look at and potentially take action on based on certain conditions in the market. For the large majority, I'd say 90 to 95% of what I do, it is bread and butter systematic trading. And we got a big tip from Philly, man. Philly down in Manchester. What's going on, my friend? I got to pull back up your comment, my good friend. 48.99 quid, my friend. Thank you so much, buddy. What does he say? He says, consider it a fine for my weekend silliness, man. No problem whatsoever, man. Weekend silliness is allowed around here. And from what I understand, although I haven't read all my messages yet, I've just seen snippets of them because I haven't responded to all my messages yet. I haven't been able to. But from what I understand, my good friend, you are going to be in San Francisco. So yes, if you're going to be in San Fran for the San Francisco Blockchain Week, which is coming up, it's coming up like 2 weeks away. Be there, be square, guys. Philip, I would love to grab a cup of tea, my brother. Wait, is XRP the standard? I mean, the standard of what not to do, maybe. Hey! Why is this guy always hating on XRP? It's like the dude's got ethics or something. It's all good. People are allowed to love XRP. Got nothing against it. For trading, investing is a different story. I've talked about this before. Token economics is all that matters. I don't see the token economics of XRP, the coin. I think Ripple's a pretty decent company. That has literally nothing to do with XRP, the token. It has nothing to do at all with XRP, the token. It doesn't matter if XRP, the token, gets adopted widely, I don't see that appreciating price. As with all things, willing to be wrong. There, you know, and that's all that matters, man. Like, I don't think that people take token economics seriously. You know, you have to understand that when buying an altcoin, the same, well, Bitcoin's a little different, but with buying an altcoin, you're literally like the token price has very little to do with the company or with the development or with partnerships. I mean, it almost has nothing to do with that. Now, because we're, you know, basically in penny stock world when we're talking about altcoins, you can get big price moves based off of news events, right? I mean, it's, you know, it's boiler room style tactics, if anybody's seen that movie or has any experience in the penny stock market. So that is a strategy in and of itself for trading purposes. But when you're looking at, like, you know, gems, you know, things to invest in, things that you're going to pass down to your family, or, you know, your children for investment purposes, you got to look at the token economics, man. Like, what makes this, what would require people to hold this token and hoard it, basically, which is what drives price up. Holding the token has to yield rewards. Holding the token has to yield rewards. And that's the failing I see in a lot of altcoin investors, air quotes, altcoin investors. And that's why I just prefer to trade the stuff. But I do hold some altcoins. But I think that the big problem with people who invest in stocks is that they're not diversified to enough cryptocurrency or precious metal exposure or real estate exposure. I think REITs are great. You know, people ask me that all the time. They're like, Justin, you say you invest in real estate. Well, how can I do that? I don't have a lot of money. Buy some REITs, man. I don't know. Buy some REITs. They're great. Not everyone's great. Do your own research, you know, do your due diligence. But REITs is a way to gain exposure to the real estate market without having to have a lot of money or go through all that nonsense. Bum, 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 bum. For all altcoins. Okay, where were we? What are we doing here? Come on, guys. Guys getting me off track. We're here on BTC USD. Let's go check out Mr. Ethereum, see what we got as far as leading. We do, interestingly enough, we do see Ethereum overperforming yet again, but to a slight degree, BTC. So here we are on Ethereum. Unlike Bitcoin, however, we have not even color flipped on Wadatar Explosion. Let's go take a look at Heikinashi. We have also similarly not trend flipped. So there's really nothing here on Ethereum to make one abandon a short position on Ethereum yet. You'd be looking, in this case, I think the most likely thing that's going to happen is you'll likely get the Minx crossover first. If you're going to be exiting out of this position, if we're going to get kicked out of this position, you'll most likely get the Minx crossover first. However, the primary thing to keep your eye on, obviously, is the closure above the baseline here at 188.48 over here on the ByBit chart. Obviously watching for something like Parallax to flip or Wadatar Explosion to flip. With Wadatar Explosion, we don't have a rising explosion level. We do still have contraction. We still have contracting volatility. So there is that. But really not a whole lot to talk about here with ETH. There's nothing here that really stands out to me as overly interesting. I just see it, again, in a downtrend and looking to enter into a trade in the dominant position, which is the downside. As far as EOS goes, EOS has not reacted very strongly off the bottom here. It is just putting in a secondary day of consolidation after a swift movement and rejection down, basically the second leg down of its rejection from the baseline. XRP continues to do fairly well. I am still long. Let me qualify all that. I've been in an XRP BTC long for several days now. Since the 13th. I entered long on XRP Z19 on the 13th. I've hit 2 take profits on that so far. And as they taught me in Zoolander, holding out for more. Now, over here on the USD chart, you would have exited your XRP USD long trade yesterday, which would not have been the best maneuver here. You are getting potentially a re-entry with a rising explosion level and a powerful signal coming in here from Wadatar Explosion, but you don't have the go-ahead. You don't have the continuation signal from Minx, so we'll just wait and see if we get further continuation from that. So looking at the chart that I'm more interested in, let's go over and look at the spot XRP BTC chart, which I think has just been more profitable to trade at this point in time. Yeah, I mean, just rallying quite well. I mean, XRP broke above the baseline right here and gave you your initial signal. You would hit TP1 potentially. I think it was just TP1 on that one. Let's get a closer look. Ding, ding. Actually, it would hit all three take profits on the very next candle that you should have taken that long trade on XRP BTC back here. You would have had a little bit of pullback, quite a bit of consolidation, to be quite honest with you. And then you finally get your continuation signal, actually a primary signal, right here on the 25th of September, which puts you in for this rally right here. And then over here again on the, this is the candle that opens on the 12th, closes on the 13th, obviously. This is when we got the go ahead to take the next leg of the long right here. So again, PTP doing exactly what it's supposed to do, getting you in for this large candle, which was quite a good move, getting you in for this movement, and also getting you in for this movement right here, and keeping you out of a lot of the noise and junk. Is there a wallet that accepts all crypto so you don't have to get one for one kind and another for another kind? It depends. There is not like one master universal wallet, Ken. There are some that are better than others. Like Exodus is pretty nice and convenient. It's a desktop wallet. Now, I don't use Exodus. I've used Exodus one time, and for whatever reason, I used Exodus to move some EOS around at one point in time. Other than that, I don't have anything bad to say about EOS. They've got a little coin swap feature in there. I think they got like I think they even let you do staking, but don't quote me on that. But Exodus is pretty convenient. It's a desktop wallet. And so for me, I don't hold almost anything in a desktop wallet because that's not the level of security that I'm comfortable with. If you're going to hold it on a desktop wallet, all that needs to happen is your computer needs to be maliciously attacked. I mean, you're open to all kinds of problems with desktop wallets, but they're convenient. I think that, again, Ledger Nano X, pretty big supporter of Team Ledger over there. I think they do a great job. I think that's safe. It's secure. There's lots of ways. I also recommend you guys go get a crypto tag, which is bullet resistant and flame resistant steel plates to engrave your seed key onto so that you can never lose your backup. I think is the best way to do it. Yeah, that's my big recommendation is a Ledger Nano X or a desktop wallet for small funds. Desktop wallet for small funds. For XRP at the moment, it's actually closer to 39 cents. 3896 to be quite honest with you, to be exact. 3896. So DIY guy, we talked about this in, I think it must have been last week. But yeah, we talked about the reality that Bitcoin is not immune to fractional reserve lending, right? So exchanges, that is absolutely a concern. That is absolutely a concern. If we centralize the custody of Bitcoin in exchanges or, Bitcoin banks, and we as a society or we as a economy allow Bitcoin IOUs to be used instead of actual Bitcoin. So there's all kinds of ways that this could be literally, I mean, honestly, what I see in my head as reality, most likely, is a completely separate digital, so a digital stable coin backed by Bitcoin. So you have DAI, right, which is backed by Ethereum. I see a BTC backed stablecoin. I think that's almost inevitable. And I think that is, I've talked about this a lot. So I've talked to some of the smartest people that I could get my hands on, that I can get to talk to me about futurism, technology, cryptocurrency, banking, finance. This is stuff that I'm really, this is what I focus on. This is my life. And because I want to be in the front of the front. I want to be the avant-garde, which is French for front of the front. literal translation. Because, early adopters get the biggest rewards. And I also want to, the world's changing, and I want to, in my lifetime, put something together for my children that will hopefully carry them through the chaos and noise that they'll most likely inevitably have to deal with as they grow up. I feel fairly terrified for growing up because the world is crazy, man. It's a lot crazier than I was a kid. I mean, we thought like school shootings and Columbine and, stuff was bad when we were kids, and, the stuff that's going on nowadays and the way that society is going to change moving forward, especially, because it's kind of like the same old problems, but on top of that, we have global political instability, right? In a way that we didn't have in my generation growing up. This is straight up, paradigm shifting global political instability. So yeah, absolutely, man. Fractional reserve lending can impugn the Bitcoin scarcity narrative, and if you allow, basically if you allow any fractional reserve lending, which is money loaned without being 100% backed. If we as a society, if we as an economy require 100% backed IOUs, for example, or lending, then there's not an issue. But looking at the history of humanity, that hasn't been the case. So I do think that we will see not 100% backed digital stable coins backed off of BTC issued. So very similar to the way that Tether is doing things right now, except for backed by BTC and not USD. But nothing on XRP BTC as of today. No exit signal, so no reason to exit a profitable trade. In fact, we just took TP2 on today's wick to the upside. So on the close of today's candle, that means I will be setting a trailing stop loss on XRP, and that's about it. That's about it, guys. Let's go to, what is it, 1250? I want to talk about longs and just some patterns that I've noticed with longs and shorts. Again, I'm fairly ambivalent as to how indicative this information is. But with longs, again, longs, honestly, very similar to Bitcoin's price in general. This is the amount of longs in BTC USD. This is the amount of currency in longs. So there is $207 million in Bitfinex longs at this current point in time. And basically the big thing that I just wanted to point out is that we don't see longs in a big scramble, to be putting on positions. Interestingly enough, like the amount of longs seems to move pretty much in conjunction with Bitcoin's price. And if we look at Bitcoin shorts, similarly, again, moving pretty much in tandem with Bitcoin's price, but kind of on the way down. And the way that I extrapolated this earlier, the way that I thought about this earlier, was that longs are not rallying to buy the dip at this point in time. And shorts are also very tentative as to whether to take the trade to the downside. So there's no directional bias to be ascertained from this, but it does show weakness for the long narrative at this point in time. It would show that most traders are waiting on the sidelines, are hedging, are taking profits, and they are looking for the next big move to enter into, which again is fine, it's safe, but as I talked about, if you're not in the market for these key moves, you miss out on a lot of the profit. So you always take the risk, in my opinion, of entering into the dominant position, and you position size in such a way consistently, and you early exit in such a way that's inconsistently, that allows you to withstand kind of the chop sometimes of throwing that jab and throwing that jab and throwing that jab and looking for a good entry and exiting when you throw a jab that doesn't connect, and following through with more capital when you land a jab that connects. We talked about GBTC, and I do want to feel, again, it's going to take a little while for me to do the like I was right ha 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 dance, because I don't really like to do that. But we talked about the breakdown of GBTC and how that could potentially be a leading indicator. But we also referenced in that video that we did yesterday or 2 days ago about how in reality, the ranges on GBTC are different. And in reality, we were driving down into not only a gap, but also an order block, also a level of demand on GBTC. It was just lower than what we saw with Bitcoin's price, because Bitcoin is at that level of demand right now, whereas GBTC's level of demand was between 8.84 and 9.23, which it broke down to the bottom of the range and is bouncing back up. No solid movement to be taken out of this. However, again, I think that closing a daily candle above this range would be a bullish sign, also be an early exit signal for me as well. Bitcoin dominance continues to trend to the downside, testing the bottom of the range, unable to break it at this point in time. But based off of this, I think that altcoins rallied last night, so it pretty much didn't matter what you bought last night with altcoins. We can see that altcoins did quite well last night. I only put on one new altcoin position last night, which is doing well. But having said that, except for, well, you know, XRP at TP2, but my altcoin trade that I put on last night did not hit TP1 yet. Now, based on this, I would be fairly generous with my profit taking on altcoins at this point in time, because either way, Bitcoin tends to pretty much do some elevator type behavior at these levels. So if we go back to Bitcoin, if we go back to Bitcoin, you know, either we're going to have a sustained movement to the upside. You know, to be quite honest with you, nothing's 100% guaranteed. So let me rephrase. If you entered into reversal trades on altcoins, I would be looking to take those profits because you speculatively entered into them anyways. I think that, as always, you should always be scanning all the altcoins and taking proper long trending signals, because price speaks for itself. Price speaks for itself. It doesn't really matter. I mean, you can do all the correlation between Bitcoin and altcoins that you want, but at the end of the day, you have to trade the chart that's in front of you. But I'd still be more tentative on altcoins at this point in time, even though we are in a range where altcoins tend to perform fairly well, and Bitcoin tends to just kind of chop around for quite a while and drive a lot of people crazy. Nothing really indicative over on BTC1. The main thing that I'm looking for on BTC1 is for us to bridge this gap trade that we filled. We filled this gap. Getting back above here would be a positive sign. 89.85, which, as I've said before, is fairly close to 9,000, which is that level at which I want to see price above on Bitcoin anyways to be bullish. So and back to Bitcoin. Jessica S. asks, do I have any thoughts or an estimate when Tether might blow up 2025? How do I get BTC USD longs versus BTC USD shorts on the same chart on TradingView? What symbol do I use? You use the mathematical symbol for division. So if we go look at, so I do something a little different than most people. So I take, so here's my longs shorts ratio. And so I do a couple things differently. So the first thing that I do is I compile data. And actually, hold on, I just saw one thing here that I need to fix potentially. Why'd you do that to me, God? Why are you doing it to me? Anyways, it's not a big deal. You just take, if you just want longs versus shorts, just go to BTC USD longs divided by BTC USD shorts. You can click that, and then you can click longs, and then you just hit enter. And that's longs divided by shorts. That's going to give you the long shorts ratio like that. I take and add BTC USD because this is the this is the number of longs to shorts. I like to see I like to further multiply whatever the number of longs is by the price of Bitcoin so that I can see the amount of money long and the amount of money short. I think that's a better way to look at it. And the other thing that I do is I add BTC USD, BTC USD, BTC Euro, BTC Japanese Yen, and BTC British Pound positions all together. Same prediction with XRP. When will XRP blow up and go down in flames? 2024. All right, so when we come back, we're going to talk about the news. We're also going to do Forex. And we'll take some more of you guys' user-submitted chart requests. And we'll have a little bit more insanity. So all you're saying is we have to get rid of banks. Well, my dream is not no more XRP. Speaking of which, we're going to talk about banks here in a little bit because I have this concept about central bank issued stablecoins or central bank issued digital currencies and the negative effects on commercial banks and kind of what that means. For me, it might mean something different from you guys because I have pretty sizable regular stock portfolio. But so that does mean something as far as my future outlooks for commercial bank positions, which I do hold funds in banks, because you got to diversify. And yes, Ali, I am planning on making a video on ByBit trading. Yes, sir. But it also does mean, I think, quite a few things to understand incentive, to understand where incentive is in the market. So we'll talk about that. But first, we're going to take a break. Before we go to break, guys, there's a link down in the description below. It's generally not how I start off. But anyways, as a trader, I'm often asked what metrics I use to evaluate exchanges, security, ease of use, and customer service. And just to get cut to the sweet point, I haven't found an exchange, a cryptocurrency exchange that has decent customer service before I moved to ByBit. And that was pretty much the big reason. And I tell people this all the time. And that's generally why I recommend it for new or experienced traders alike. It's got 4 pairs, so you won't get overwhelmed. And their customer service actually is service. I just don't know how else to put it, guys. Anyways, there's a link down in the description. Prior to October 1st, that link would have got you an extra margin deposit. I have not figured out if it currently gives a margin bonus still. All right, haven't figured that out. So, anyways, bybit.krakencryptocurrency.com if you guys want to support the channel. We'll be right back, guys. We're going to take a brief break. When we return, Forex. User submitted chart requests and news, guys. Don't go anywhere. We'll be right back. Welcome back, guys. And we are back. We're live. We're ready to go. All right. So what we're going to do. We got a lot of news to talk about. So let's hop over to the news section. Now, this is all going to fit a narrative today, and I want you guys to pay attention to the narrative pretty closely, right? And the theme that I want you guys to pay attention to is everything that we're about to talk about. What does everything we're about to talk about insofar as we're going to talk about Canada launching plans to have their own digital currency and to actually kind of phase out physical currency. And we're also going to talk about the Bank of England calling for a basket world reserve currency, and we're going to talk about some regulation. What does all of this mean for commercial banks? Now, that might be a murky topic for some of you, so let's talk about that real quickly. There's a difference between a central bank and the power that they possess, and commercial banks, which are smaller banks that are generally responsible for distributing funds to the end user, which is you or me. So each of these commercial banks have their own interests, their profit and loss interests, as opposed to central banks who have different interests. Their interests are generally tied up with world stability or world power or government influence, things of this nature. And they act on a more global macro scale, whereas commercial banks tend to focus more within their own country. That does not mean to say that they don't have influence outside of their country or that they don't have interests outside of their country, especially as it pertains to profit and loss. But I want you to think critically about what all of this means for commercial banks as opposed to central banks as we start walking through some of these narratives. So the first article that I want to talk about here is Bank of Canada and their plans to consider CBDC. Now, I know that sounds exciting, especially for some of you with physical ailments, but it's not CBD oil. All right, this is CBDC. So Canadian bank digital currency. So the Bank of Canada is considering developing a digital currency that could, in their opinion, eventually replace fiat money completely, according to local media outlet The Logic. Now, it's not that it's going to replace fiat money because it would still be fiat created by declaration of the government, but paper money, physical currency. So they did a presentation called Central Bank Money, the Next Generation, in which they described a central bank issued digital currency providing a variety of benefits to the Canadian populace. Among them, for financial authorities. Among them, and this is they highlighted as a strength, the sharing of personal data with tax authorities or police, because that's just absolutely what we want. We want to just buy into this narrative that more scrutiny of financial transactions is what we need. We just need more regulation. That's what's going to, we really need to be terrified. We absolutely have to be terrified of the terrorists. We have to be absolutely terrified of the peddlers of, bad things. That's just the only way I can put it. They always scream the same thing. The government will always scream the same thing to clamp down for control, which is we have to protect you from all the bad people. Well, in my opinion, America kind of figured that out fairly well, and it's called the Second Amendment. So I can have a gun and I can shoot bad people. But other countries have not adopted this to the degree that America has, and that's a murky topic anyways. But just kind of putting my opinion out there that anytime they say that we need more control, we need more scrutiny into your personal data so that we can stop bad things from happening, the government is fairly terrible at stopping bad things from happening. They are always reactionary. They are never proactive. They always react after a calamity or catastrophe has occurred. It doesn't matter whether we're talking about natural disaster, nothing that's perfect in life. But anyways, The Logic, which acquired the presentation through an access to information request, found out that the Bank of Canada is serious about developing its own digital currency to fight, in their words, the direct threat of cryptocurrencies. Now, the new central bank digital currency that they're talking about would be widely circulated, and it would initially be used in parallel with paper money. The end goal, however, would be to have this digital fiat as the only functional form of money. That is a complete dissolution of paper money. Now, this unearthed presentation was prepared by, I don't know whether it's Stefan or Stephen, but I'm going to say Stephen Murchison, who is an advisor to the Bank of Canada Governor Stephen Poloz. Don't know if I'm saying that right either. In it, he writes, quote, "We need to innovate to stay in the game. A CBDC would provide all the benefits of a central bank-backed asset, as well as the convenience and security of wireless electronic payments." Now, Murchison has led the central bank's digital currency research for the last 2 years, and he has found, in his words, a number of benefits to central bank adoption of this digital technology. And the report lists dozens of benefits and only one drawback. Specifically, and here's the critical point, here's where we kind of reach this juncture of where I want you guys to think critically about what we're talking about as it pertains to commercial banks and their interests, their incentives. The report that Murchison concocted lists dozens of benefits for the central bank and for Canada adopting a digital currency, and one big drawback, specifically the digital currency presenting a risk to stable, low-cost funding for bank deposits. Okay? Go back to what we've talked about a whole lot before. Bank deposits in the form of interest rates and what the central bank, the powers that the central bank has at their disposal to avert things like financial calamity, to avert things like financial disaster, or huge shakeups in the market. And we've talked about this at length with the repo markets and kind of the problem bubbling here in America as far as those repo markets go. So, what is the drawdown? What is the negative? Think of that specifically. This report lists the negatives of a digital currency being a risk to stable, low-cost funding for bank deposits. And I thought of it this way. Although most money is digital, people still feel, or perhaps there is, some realistic incentive to have your bank geographically close to you, or at least a branch of your bank, because you're going to walk in and sometimes deal with actual physical transactions. But as we transition more and more to the digital age, there is far less incentive to actually do that. And I think cryptocurrency is a really good example. We've already seen the centralization of cryptocurrency as it currently sits. A large majority of cryptocurrency that is actively transacted sits on exchanges. And although there is a large sum of cryptocurrency in cold storage, that is largely due to exchanges, again, holding their funds offline in cold storage, and also due to whales, individuals who have large amounts of cryptocurrency. Either they were early adopters, mined large amounts of cryptocurrency, also miners as well. For the most part, most actively transacted Bitcoin, so most new Bitcoin that is minted and comes into creation goes directly onto exchanges. So we've already seen, in part, a centralization of cryptocurrency in the form of exchanges, and we've talked about the security risks that these present. And we've also seen over the last decade or so a centralization of commercial banks to a degree. Smaller and smaller, and this is the same thing for local and small business as well. But we do see in some parts of America in particular, a attempt to revive that local economy feel, an attempt to revive that Main Street feel, with mixed results. So, because we've seen a centralization of commercial banks, and because we've seen this pattern of centralization with digital currency in the first place, my point here is that it makes less and less sense for there to be a local branch of your bank if the money is 100% digital anyways. And this kind of coincides with just how the new generation is comfortable with centralization of information. They want convenience, and I would say that those advocating for privacy are in the minority. Although, again, very similar to this kind of concept in America of this resurgence of this mainstream local economy mentality, again, we do also see a rise in popularity of the privacy movement and the decentralization movement, which is a good thing to see. However, overwhelmingly in our global society, the trend is towards centralization, unfortunately. So there becomes less incentive to have as many commercial banks and more centralization of these commercial banks, especially when the newer generation that is going to be adopting this currency and this new currency and this new technology are largely okay with centralization of data. Everybody's fine with Google being the powerhouse for everything. Everybody's fine with Facebook being the powerhouse for everything. Everybody's fine with Amazon being the powerhouse for everything. People are increasingly more and more comfortable with centralization. So what effect would this have on commercial banks and their profit incentives? So officially, the Central Bank of Canada has claimed that it has not yet decided or committed to launching such a project. However, the Bank of Canada did agree that banknotes are becoming obsolete, as well as they are seeing increasing pressure from the cryptocurrency space. Quote, cryptocurrencies may become a direct threat to our ability to implement monetary policy and to act as the lender of last resort. Now, if the Bank of Canada does move ahead with a plan to transform their currency into a new age, love that term, digital credit, they will be among some of the first nations to do so. Nations such as Sweden, China, and other notable states are already on the path to embracing this new technology as well. So that's plank one in the chain. Now let's go over and talk about Bloomberg screaming at the sky. So this is from Bloomberg editor Joe Weisenthal. What a name. Regulators can shut down Bitcoin anytime, he claims. Okay, let's see what this talking head has to say. So, writing in his Bloomberg newsletter at Markets, Bloomberg executive editor Joe Weisenthal warned that law enforcement authorities can shut down Bitcoin at any time, and he cautions institutions from getting involved in exchange-traded funds, ETFs. Now, in this newsletter, he also advised institutions against investing or creating Bitcoin-based investment products because they could become a tool to drain capital away from fiat markets. Oy vey, what a terrible idea. What a terrible idea. And again, it's not really fiat markets. It's really equity-based markets or debt-based markets. So on top of Bitcoin ETFs, Weisenthal said that no regulators would want to approve fiat on-ramps to pump money into the Bitcoin ecosystem. The reasoning being is that it would make fiat unattractive to investors, as well as act as a sort of subsidy to that market, increasing the amount of illicit financial transactions. And here we have more of the same, screaming at the sky about the dangers, only the dangers. It's one small narrative, it's one small portion, and it's the same hackneyed, tired argument that these people always come back to. The only thing that they can ever say is that Bitcoin facilitates illegal transactions. Bitcoin is used by criminals, the only people that would want to use criminals. And really, this is the core of what this man's saying in particular. He says Weisenthal thinks that he says that Bitcoin has only one critical use case: to facilitate trades that the governments and regulators, or as he calls it, the man, does not want anyone to make. And that makes the cryptocurrency an ideal tool designed to serve criminals and criminals only. Because, and again, I want to juxtapose this with a TEDx talk that I just watched recently. And I don't know how many of you guys are familiar with Bill and Ted. But Ted from Bill and Ted, I think that's right. Was Bill Keanu Reeves? No, Ted was Keanu Reeves. Okay, so it was Bill, right? Yeah, Bill. Bill, I can't remember his name off the top of my head. I think it's Austin something. He's become quite an advocate for digital privacy. And he gave a TEDx talk recently where he was talking about his research into the Silk Road incident. And he has a video about it. It's a documentary called Deep Web. It's actually quite good. I recommend you guys go see it. And in that video, he interviews a lot of individuals who were involved with Silk Road. And something that we know, obviously, from being around at that point in time and just knowing these things and doing our research and being involved in the space. And this is also true of a lot of people involved in cryptocurrency. There is, a lot of individuals, a lot of newer individuals are involved in cryptocurrency for the money. I'd say that a lot of people who came in 2017 are mostly interested in cryptocurrency for the gains, and that's fine. But kind of a side effect of being involved in this space is the inevitable adoption, slowly but surely, of some libertarian concepts, some politically motivated concepts of privacy, of security, of decentralization, of the dangers of centralization of power, the dangers of centralization of information. All of these things are, I think, just kind of a byproduct of being around in the space. So, as an advocate for the space, I actively, pretty much tell anybody that I come across, they're like, hey, should I buy Bitcoin? Yeah, buy some Bitcoin. Just, it's a simple answer. If anybody ever asks you if you should buy Bitcoin, and if you're involved in the space, I think the very strong, very confident answer should always be yes, you should buy Bitcoin. Always. It's great. It's cool. Now you can be a little bit more nuanced and a little bit more grandiose with your explanation of why Bitcoin is a good buy at pretty much any level. But it comes down to, I guess, maybe my incentive of getting as many people involved in the space as possible to help spread this kind of thinking as well. Because the more people that care about privacy, the more people that care about decentralization of information, then the better that we have, the better chance that we have of actually implementing some policies or some changes in the world to actually move this movement forward. Now, and so my tangent about Mr. Bill there was, his research into Silk Road, saying that most of the founding members, and again, most of the individuals that became involved in cryptocurrency prior to 2017 were involved for political reasons. Now, that's an overgeneralization, it's an oversimplification, but it's almost impossible to talk to people who are active in the space and not get some acknowledgement from them of libertarian style principles, of free markets, of free economies, of less government intervention, of less government regulation, of freedom, of providing a voice, of providing a currency to political dissidents, of supporting political dissidency, of actively supporting people standing up against government or against centralization or against the global financial structure. It's very, it's fairly rare, although they do exist. It's fairly rare that you come across somebody who is, an active investor or an active trader or actively interested in cryptocurrency that is just lock stock, government has a plan, government's fine, we should do everything we can to support these capital markets. It's a very different narrative from what you get on something like Bloomberg and from what this editor of Bloomberg, Mr. Weisenthal, is attempting to solicit here. So he says, by funding new markets, creating new markets, essentially, creating more opportunities to inject more money into Bitcoin and the Bitcoin ecosystem, that would only serve to increase the number of financial crimes, regardless of the fact that most crime is done with Benjamins, not the blockchain. There's a reason most dollar bills carry traces of cocaine. Now, sooner or later, he says, one law enforcement agency or another will be forced to develop a strategy to destroy Bitcoin once and for all. We already talked about this back in 2012. The Department of Justice actually launched an active investigation into how to shut Bitcoin down. And guess what they realized? It's going to be pretty difficult. You're going to need pretty much a worldwide unified movement. It's, Bitcoin developed its security by largely being ignored during a critical point of its development. And now it's decentralized enough to the point that it's very, very difficult to shut this down. He says, if you're building or launching these institutionally grade products, how sure are you that down the road regulators won't come in and shut it all down? Questioned Weisenthal. There is so much interest in this space, but is anyone thinking this through? Again, this is, I think, short-sighted. There is absolute potential that if governments do want to attempt to take negative enforcement against cryptocurrency, they could make an impact, and it could negatively affect the price in a significant way for a period of time. In fact, I've already talked about the tough road that cryptocurrency has ahead of it, specifically Bitcoin, with the threats that it faces. I think the biggest threats that Bitcoin faces for price going up is obviously any kind of intervention from governments and from central banks, from central bank issued digital currencies, and from corporate coins. And I think we're going to need to see all of these things happen. I think we're going to see this natural evolution of this technology emerge before we see the strength of something like Bitcoin, which is decentralized and has all the benefits and characteristics that these other offerings just do not. These other offerings are, they are dyed in the wool, tried and true, centralized, the exact same thing. It's all the convenience of digital currency and all the downfalls of centralization of power. And it is those downfalls, it is the perils of the centralization of power, the centralization of private information, the centralization of your data at the end of the day. It's the centralization and monopolization of your data and the financing of your data, the making money off of selling your personal data and using your personal data to control you. That is the risk. That is the downfall. That is the danger. That is the Achilles heel of all of these kind of concepts. CBDCs, corporate coins, they all come down to the exact same thing. They're centrally controlled and issued. They do not defeat the scarce money, the deflationary supply, the non-seizable aspects, and these are all concepts that that Mr. Weisenthal completely ignores here in his argument. He's saying that Bitcoin only exists to facilitate criminal activity. Well, we know that ostensibly to not be true. We know that there are other value propositions of Bitcoin that he completely does not take into account. Ones I just listed. For example, Bitcoin is non-seizable. Bitcoin is designed by scarcity. It is asset-based, not debt-based. It is deflationary in its supply and its inflation model. And I think those things, the non-seizability, again, were reasons that prompted me to get involved in cryptocurrency, especially after seeing kind of the writing on the walls as far as what do governments do when they feel threatened? Well, they tend to seize money. You just go research any large, massive war, and you'll see that inevitably, for citizens of that nation, when a country is at war, they tend to not have as liquid access to their money, and the economy tends to not do too well. The newsletter went on to describe Bitcoin as an ecosystem run by two kinds of users, speculators and transactors. He said that the Bitcoin protocol works when certain people expect more massive profits out of their so-called Bitcoin investments, or when they use Bitcoin to conduct transactions away from the prying eyes of regulators. Both kinds of users, wrote Weisenthal, complement each other. You basically described every single market based on supply and demand. Everybody, for the most part, has an interest. There are two roles in the Bitcoin ecosystem. There are people who are using Bitcoin to make transactions, especially, for example, there's another thing that I forgot to mention, which is those who need to have censorship-resistant money. People who are making transactions and using Bitcoin actively as a currency to avoid government regulation, and there's nothing wrong with that. Doesn't really matter if it's criminal or not. The same thing happens with actual paper fiat money. Criminal activity will always happen. You don't ban pencils because a criminal might stab you with a pencil. That's ridiculous. You don't ban cryptocurrency because criminals can use it to transfer illicit funds. It's silly. You don't ban new technology because criminals can use it. But, speculation is the lifeblood of any market that is appreciable or depreciable. Any asset that can go up or down in value, just like the equity market. He's not making a very strong case here that every other traditional investment, equities markets, forex markets, precious metals, people are buying them for the most part, either for, well, there's some individuals are using to hedge. But again, even when we talk about hedging against global instability, such as the precious metal narrative, you still cannot get away from the eventual idea that either you want to have more money when you sell your investment than when you bought it, or you would at least like to have not lost money on your investment when you sell it than when you buy it, right? So the entire concept of hedging does not get around the end goal, or I guess not the end goal, but the initiating goal, which is I am participating in this market as a speculator so that I either make money or don't lose money. That's the entire point. Otherwise, if people could just stick their money in a bank and not lose any money or not lose value to inflation, most people would just do that. But they can't because of inflation. And there's quite a few people who came out in response against this. A man, A. Pompliano, for example, Larry Cermak of the Block. So, again, it's a little bit more on the realm of, just kind of wild hand-wringing against Bitcoin and the same old use cases, or the same old arguments being levied at Bitcoin that are always levied at Bitcoin that have no real logical foundation. Now, the last thing that I'm going to talk about real quickly is just Bank of England, Mr. Mark Carney, Bank of England governor, basically saying that the world needs a rebalancing away from the US dollar hegemony, and essentially talking about how a basket currency, basically what Libra's idea is a good idea. Of course, Libra just inked its official charter. And his quote here is just what I want to read and then kind of leave you guys to think about that. He says, "There is an upside, though, from the global system of having a basket currency if it is adopted, and that it would be part of, at least in my view, of that rebalancing the system away from the hegemony right now, which is the US dollar, to something that is more balanced, which is what a multipolar world needs." So there's a lot of, I listened to a speech here. And, and I also read the kind of notes from it as well and some commentary on it. And again, he uses a lot of, this is some language that I've noticed a lot from the Bank of England and from some other banks on their, kind of official statements, as well as the ECB, which is this idea of, we need, it's a multi-world, we've got lots of economies and lots of nations and we need to move away from US dollar hegemony. And while I do agree with that, it's again, you kind of have to look at what are the incentives of the people that are saying this. So you have the European Union, which is a basket nation, right? A nation made up of lots of different nations. And they are promoting a narrative that we need to get away from US dollar hegemony because it's a multi-nation. You know, we need lots of currencies and, you know, a basket and stability and all this and that. Well, you guys kind of have a direct, you know, you guys are basically advocating your own model toward, you know, worldwide finance. And although I do agree with that in part, you have to look at the incentives of the people who are promoting these narratives and the language that they use, because the language I've noticed is pervasive throughout most of what the Bank of England and throughout what the European Central Bank, they keep repeating this narrative of, you know, multipolar world, you know, kind of these universal standards, universal currency, blah, 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 blah. And again, while I'm not a huge fan of US dollar hegemony, while I'm not a huge fan of the petrodollar and, you know, the world's dependence on the petrodollar as the reserve currency, I also am fairly tentative against making the situation worse, right? Because at least with dollar hegemony, you have one nation and one central bank that can kind of screw it up for everybody. Of course, you have a lot of different actors, but you kind of just have one actor to go to, and you can kind of monitor less data. When you start developing this worldwide basket, you open yourselves up to more risk and more danger, in my opinion. So, and again, this is why I think that something that's more decentralized and is just more honest, something like Bitcoin, does work better as a reserve currency. And again, you know, I want to comment too because I think it was yesterday somebody came in the chat and said something, and this is, you know, kind of something that I hear quite a bit, which is like, oh, you know, this hodling, this, you know, this Bitcoin is a store of value, this Bitcoin as a reserve currency is a silly idea. Bitcoin was made to transact, blah, blah, blah. You know, I disagree with that, man. I really disagree with that. And, you know, that might have been, you know, and again, this is, especially if you guys kind of wade deeply into kind of the Bitcoin narrative and the Bitcoin shows and the individuals that talk and influencers and all these different narratives that are being cast around. There seems to be it's become popular lately, this concept that the store of value proposition for Bitcoin is silly, should never have been conceived. Bitcoin was always for transactions. Bitcoin was always made to be spent. And, you know, we shouldn't even be talking about it because that's not going to actually help it grow as a currency. I think that is a silly narrative. I think that more and more and more we've seen, due to Bitcoin's meteoric rise and growth, the actual potential that it does have as, I wouldn't say it's very secure right now as a store of value, but we've seen its potential to do such a thing in the future. We've seen the stability of the network. We've seen the growth of adoption. We've seen the growth of use cases for cryptocurrency, particularly Bitcoin. And I don't think that the store of narrative value is silly. I think that it is a natural evolution of a response. And I also, again, I'm always looking at the incentives, and I look at people who are advocating for things like BSV or things like Bitcoin Cash. And a lot of those individuals are advocating, which again, I don't have anything particularly wrong with BSV, the currency. I don't see its necessity, just like I don't see the necessity of Bcash. But again, a large part of that narrative is that a large portion of what those individuals say is based on that same narrative, that the store of value proposition is dead, that the store of value proposition should never be brought about. We shouldn't even be talking about Bitcoin as an investment. We shouldn't even be talking about Bitcoin as a hedge. You know, we should only be talking about Bitcoin as a currency. I want to use Bitcoin to buy my coffee, and God darn it, if I can't do that, then it's not the Bitcoin I signed up for. #RogerVeer. And I just don't agree with that narrative. I don't think that's right. I think that is one way to look at cryptocurrency, and I think that is one way to do things. But for example, I haven't paid more than like 5 cents to send a cryptocurrency transaction in quite a long time. And there will be periods of time where we get you know, a clogged, you know, mempool again, and transactions are expensive. We'll have periods like that. It's a pretty natural part of but we saw that one time back in 2017, and transaction prices fell down. It was at the period of high network activity. Also the launch of Bcash. There's a lot of evidence that there was a lot of mempool spamming from the Bcash community. So again, that's speculation, but I don't really see that. And again, that's also because I support development, something like the Lightning Network, which I think is good and also enhances privacy. It also enhances this ability to do these sorts of transactions. Anywho, let me know what you guys think. Back into the live scene. Holochain up 7.4%. Back to Bitcoin on the hourly. Kendi, I knew you were a, oh shoot, what's his name? Craig? Not Craig Wright, but Uncle Craig. That's his name. Gosh darned it. Words. Can't think of Craig's last name. But yeah, I saw his, you know, I've followed him for quite a while. But you know, he's a neat guy. He's a neat guy. I don't think I pretty much I don't delve too far into those topics though. Dennis Quilhas. Let me see if that was your question from yesterday that I don't think I got to. Which was, you know, I think your question yesterday was, why do I recommend using a separate email for each exchange? And then why should you use a VPN to connect to each exchange? And I go over that. I think you're in the group. I go over that in my BitMEX 2.0 video, which I recommend you watch. It's, you know, I should probably rename that. It's because it's focused on BitMEX, but it also goes over proper account setup. There's a couple, I think, critical reasons. So every single exchange, pretty much every cryptocurrency related service that I use, and in general, other services as well, I create a separate email with two-factor authentication on both the email account and on whatever account that I'm looking to use. Absolutely, if it's a cryptocurrency account, because that is decentralization of data. It's decentralization of risk. Okay. So if I am the victim of some malicious attack and somebody gets access to an email, you know, login, if somebody gets access to my email login credentials, for example, this could be a clipboard attack. This could be a phishing attack. This could be, you know, somebody could just brute force my, you know, one of my email passwords. Highly unlikely because I use, you know, 36 character passwords, but I tend to remember almost all of them, but that's just me. But that, you know, the amount of work that would be required to take all my funds down, right? Because I have, you know, funds on this account, and I have information on this account, and I have personal information on this account, personal information on this account. So instead of just having like all my information centralized in like my Gmail, for example, so you know, if somebody were to hack my personal Gmail, they might see like my dentist schedule, but they're not going to get any of my financial information. And again, when we're talking about, you know, cryptocurrency, there's nothing that hackers seem to like more than trying to break people at points of weakness and resistance. And often, even though exchanges can be points of weakness, it's often the personal user that is the point of weakness. So, you know, phishing attacks are quite rampant. You know, personal emails getting hacked can also happen quite a lot. People storing their passwords or their two-factor authentication recovery seeds on things like Google Drive, on things like text files on their desktop, which are subject to clipboard attacks or just, you know, deliberate malicious attacks. I think it's absolutely essential, not only for security, but also for privacy. Because again, if you are originating everything from the same email address, then if somebody starts tracking your email address and your online digital activity, well, then it's not too hard to create a web of everything that you're involved in. And I don't like that. I don't like, you know, people being able to, because people do have the digital ability to do it. And we're not talking governments, but black hat hackers and malicious actors, but mostly governments. But, you know, malicious actors, government, I repeat myself. I don't like them having the ability to reconstruct easily a web of my online digital activity, especially as it pertains to cryptocurrency or especially it pertains to any of my finances, because it's none of their damn business. And for the same reason, that's why I advocate utilizing a VPN, because masking your personal IP address is absolutely critical, because in the same fashion, finding your IP address is super easy, man. All I got to do is ping you, and then I can pretty much follow your digital activity anywhere you want to go. Anything that is issued from your IP, pretty much just track it around the internet. So if you are masking your personal IP address with pretty much all of your online activity, that is a huge layer of privacy that you are putting on top. And we live in a world where private information can be sold, utilized, manipulated, and generally not for your benefit. There is almost nothing that happens once your private data leaves you and leaves some warehouse, basically, where it is being sold, repurposed, repackaged, reutilized, that is in your favor. You know, and this is a big thing that I talk about, because I talk about digital privacy a lot, and I get this question. And you know, it boils down to this: Justin, why should I care about digital privacy? I got my Google, I got my Facebook, I got my Amazon. It's all easy, it's convenient, it's simple, blah blah blah. Listen, I use Google, I use Amazon, I use Facebook, but there's a difference between, basically tolerating some level of intrusion and taking proper precautions where you can, and paying a modicum of respect to your own digital privacy, and just throwing everything that you are out there into the wind. Because, and this is the point, once your private data is picked up by anyone else, and this doesn't matter what websites you visited, this doesn't matter what purchases you made online, this doesn't matter where you've driven to on Google Maps, this doesn't matter who you're dating, this doesn't matter what pictures you're looking at online, it doesn't matter. Any private data that you're leaking out onto the internet, once it's picked up by somebody else, it is never, ever in the history of mankind used for something that benefits you. So there is zero benefit to you being okay with your private data being used for other purposes. There's no incentive to you. And so if there's no incentive to you, there should be a opposing incentive for you to block that off, because you're not getting any benefit from it. And that's my biggest use case. I think that in cryptocurrency, there's some cryptocurrencies that have kind of had these same concepts. And this is a concept that I fully advocate for as well, which is, if you're okay with your private data being leaked out there, then at least you should be getting paid for it. You should at least be monetizing your private data, because Facebook, Google, all these companies, the government, so private companies are making lots and lots and lots of money off selling your private data. Governments are gaining lots and lots and lots of power and control by collecting your data, right? And categorizing your data and databasing your data and putting you in networks and creating, flowcharts. So you should have the option to monetize that personal data. And the only way that we can kind of put this line in the sand and create that opportunity for private citizens is for people to start taking their digital privacy seriously and turning off the spigot of just, flopping all this personal data around there. And then you had another question that I wanted to address. You said something about stop loss versus hedging. And I'm not really sure what you mean by that, my friend. If Bitcoin is Alpine Whip asks, if Bitcoin is unable to scale as a payment or remittance system, are there any other projects that I think have potential in that department? Well, I don't think that Bitcoin is unable to scale as a payment or remittance system. I don't see that problem at all. Because I view that as, so first off, I don't even see that as an issue. Because there's no problem. I face no penalty or fee for going to Bitcoin. I can go to my Electrum wallet right now and send $5. I can send 50 cents down to anywhere I want and not pay a large fee for it. And I can send, again, I could send $1 billion for about the same fee. In fact, what was it? $800 million was just sent on the Bitcoin blockchain recently for what? About $3? But any other payment or remittance systems, again, I would prefer to see something like DAI. I think DAI is the best stablecoin out there. So I'd like to see a digital stablecoin backed by BTC. Yeah, so yeah, he says, Justin, please, 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 stop loss versus hedging. What are the pros and the cons? I can't find an answer on the premium group or in the Google Drive. Maybe get a hold of me in the Discord, because I like I would like a little bit more nuance into your question. He is a robot. Ill Matt says, biggest thing about privacy is not because we are doing illegal things, but what is legal today could be illegal tomorrow. And you're correct, my friend. Cy Wolf says, so you connect through a centralized system VPN to your destination exchange. I don't really see the downside of that. So let's just say worst case scenario, because I see a couple comments responding to you. Worst case scenario, let's say they keep logs of what I do. Your ISP is already doing that. So there's no downside to adding a layer of privacy to those who cannot directly petition your ISP or the VPN, right? So let's say you're right. Let's say that, let's say that the VPN that I use collects all my data, logs it. The government comes in and says, hey, give me that data. At least I am reducing my downside risk. At least I'm reducing my risk to other malicious actors that do not have the ability to penetrate the security of the VPN network. Can we agree on that? Justin, can you explain the switch from .com to .io? I know, odd question. Figured to have some insight, though. I'm maybe not an expert in this topic, but I would suppose that it's because .coms are getting pretty darn expensive and scarce. Especially if you want to, something that's like popular or like a regular name. There's wholesale harvesting of .coms. People just go out and just buy up just thousands and thousands of .coms that could at any time be something, profitable. And they just hold those domains and then they sell them to you at exorbitant prices if you want to utilize them, or rent them to you, for God's sakes, which is never a good idea. What do I think about NPass? I don't know anything about NPass. I believe it's a password manager. I don't have any particular. I've literally never used it, so I have no comments. I know some people that like. Trying to think. Geez, what is secure data? It's not data. Not data dash. It's like data lock or data something or data doc or something like that. And LastPass. But you kind of run into the risk of centralized servers with those. Ideally, the best password manager would be an encrypted file on your own system. Ideally, something you could keep offline in an air-gapped computer. All right. I was going to click on approving that message for Michael Weston, and I see somebody beat it to me. Dashlane, that's what it is. In RoboForm, yeah. I've heard good things about RoboForm. Hey, Jurgen, good to see you, my brother. All About says, at Cracking Crypto, 2.8K coming soon. 69 days. Remember me, capitulation rings closely. I will, man. If we hit 2.8K in 69 days, I will take you out to dinner. I wonder if I guess no, I just have to kind of do some live experiments to see if a message is flagged in YouTube, does it appear on the chat on screen? Because it's a different system. It's an amalgamator. Not a whole lot of exciting things coming in from Bitcoin right now, and no active trade on the table. In fact, in about 5 minutes, you want to be exiting your long position and waiting for the next one. Already had one good one, and now exit. Did we do question of the day? We have a question of the day. Question of the day is, oh yeah, and I'll do this too when we go to the end scene here in a little bit, but question of the day is on altcoins. Are you guys filling up your altcoin bags, or are you unloading them? Do you guys think that these altcoin rallies will continue, or are we topped out? That's what I want to know. Or do you guys think we haven't even begun yet? I want to thank yesterday's crypto comment giveaway winner, Crypto Caveman. And today's winner, of course, was Mr. Saintsy, the one, the only. I would be happy to sing you a song if my throat didn't hurt. Guys, I got a lot to do. Excuse me. So let's head on over to the exit scene, guys. Howdy ho, neighbor. Hey guys, thanks for joining me for another exciting episode of Breaking Bitcoin. Of course, I've been your host, Justin Wise, lead analyst and senior mentor around these parts. At least that's what they tell me. If you guys enjoyed the show, make sure to show some support by subscribing to our channel or following us if you're over there on Twitch or D Live. Don't really know what to tell you over there on Roku. You could also share this broadcast around to your friends, your family, to people you don't even like. Information's good to have. Also, drop a thumbs up on the YouTube channel if you guys have not already on this video. It does help us out with the YouTube algorithmic gods. Let's see here. We were going to be in San Francisco, guys, in like less than 2 weeks. So if you guys are going to be there, please let us know. Please let us know. Really excited to try and organize a continued meetup. Also really excited if you guys, if you guys are going to be attending, or if you guys kind of know anybody that's going to be there, either from a project team, we'd be happy to do some interviews. We're going to be doing interviews all week long. We've already got quite a few lined up, but please, if you guys want to help out with creating some great content on this channel, and some people that are going to be attending, let us know. Give us, make some introductions, and we'd be happy to do some interviews. Really looking forward to that, honestly, and being down there on the live stream. We will be back. Today is Thursday, so we will be back tomorrow at noon Central Daylight Time to break down the markets and give you some more of our consistent, concise ramblings about cryptocurrency, finance, and the world, as well as investing. All right. If you guys are new, experienced, or aspiring traders, make sure to check out the link, premium.krakencryptocurrency.com, to work with our team and push your skills to the next level. And regardless of what you do, make sure to go to discord.krakencryptocurrency.com and join the live community, open to everybody. It's where you can connect with somebody, I'm sure, who is into your method or style of trading, or learn more closely about how we do things behind the scene. If you have any questions, comments, concerns, sarcastic remarks, or death threats, please leave them in the comments section down below, and I'll try to respond to you within the next 48 hours. And question of the day is, are you guys still filling up your altcoin bags? Or are you unloading them? Is altcoin season here? Is it coming? Is this the best time to be buying? Or should we be distributing all over, up, down, left, right, and around? All right, guys. I will be back here tomorrow. Trade safely, and I'll see you tomorrow to crack some cryptocurrency, guys.